Coming in for automaker Tata Motors, which has seen a downtick in both the top line and bottom line. PAT for the quarter has missed analyst expectations, and that has come in at 3,450 crores versus 3,832 crores in the same period. In fact, Shrishti Sharma, my colleague, is joining us on the phone line to help us make sense of these numbers. So not such a good set of numbers coming in for Tata Motors. Shrishti, give us a fine print.
So when it comes to Tata Motors numbers, we can say that the revenue has come in line to what we were expecting. But apart from that, on all the parameters, there's a big miss versus our expectations. Especially the profit figure, 34,050 crores is what the company reported. We were expecting a number above that 5,000 odd rupees mark. If we talk about the internals, then that's the JLR business that has seen the most of the drop, because it's the volume that was impacted on the back of some temporary supply issues. JLR EBIT margin has slid to 5.1% mark. That's a decline on a sequential and on a YOY basis, while the India business has done pretty well. But the silver lining is that the company does remain intact with its FY25 guidance. That remains unchanged for achieving 30 billion pounds for JLR top line by the year end. Alongside EBIT margin guidance is to be reaching that above 8.5% mark and achieving a positive net cash flow position. That is also intact. In terms of the India business, that commentary is also seen to be on the positive side, especially on the commercial vehicle side. They're expecting a gradual pickup in demand in Q3. So all in all, what we can say is that on the number front, there is indeed a miss, but the silver lining is that the guidance remain intact and the company is hoping for a stronger second half, a strong rebound in the second half of the current fiscal year versus the first half, and specifically the weak performance that they registered in Q2. So that's all about Tata Motors earning. Back to you.
All right, so Q2 PAT of Tata Motors did miss the estimates that the street was penciling in. In fact, in the virtual press conference that the company held, we heard from the group CFO, PB Balaji, who shares that the company is expecting improvement in H2. He also sheds light on the China and UK business of the company and the growth expectations. Take a look.
JLR wholesales are expected to improve sharply as supply challenges ease. And overall, we expect an all-round improvement in performance in the second half of the year and the business to become net debt-free by end of this year. But the bigger challenge in China is the credit availability for the dealers who are there. And therefore, there has been a shrinkage on the number of dealer outlets that are there. So watch that market would be my number one. What is the worry bead that I would have? I'll worry about dealer finance availability in China. If that is and that's an industry-wide issue, we are in a much better place because our inventory levels are very low and customer attraction of the products, the imported products, are doing pretty well. So therefore, let's see how that plays out, but we will have to keep watching that. The compensating factor for China is UK for us, which has had a very bad patch last year, but that's coming back strong. So we should be in a position to, even if there is stress in China, we can take it in the benefit from UK, we should be able to use that.
If you like this video, then like, share and subscribe to ET Now.